Shiba Inu bulls are back at the door. After one of the worst monthly performances in recent memory, the token is now knocking on a resistance level that has rejected every prior recovery attempt this February. The question is not whether the rally is real. The question is whether this time the bulls have enough behind them to finally push through and make it stick. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. According to data, February 16th, 2026 places Shiba Inu at a defining technical crossroads. The 30-day performance stands at a 22.1% decline, and the trailing 12-month reading reflects a 58.8% loss. Those figures carry the weight of sustained selling pressure that compressed the market capitalization through the first 2 weeks of February. The February 6th monthly low of 508 units is the confirmed base from which the recovery structure is being built. The weekend recovery through February 14th and 15th drove price from 575 units back toward the upper end of the February range, placing Shiba Inu in direct confrontation with the 667 unit resistance threshold, the level analyst Ali Martinez identified as the boundary separating a short-term relief bounce from a genuine trend reversal. Price behavior at this exact level over the next 48 hours determines whether February's recovery becomes a structural breakout attempt with meaningful follow-through for the holder base. A confirmed close above 667 would represent the first definitive short-term market structure shift since the February 6th low, providing the clearest technical argument for sustained upside that the month has produced, and changing the analytical framework for the weeks ahead in a material and measurable way. The central development on February 16th is Shiba Inu's active attempt to reclaim 667 units as a support base. The transition, Ali Martinez identified as the key near-term directional event. According to data trackers, the token is trading at 665 units, a 3.4% 24-hour decline as price consolidates after the prior session. The intraday session touched 688 units before sellers pulled it back, confirming active resistance defense at the upper band. The 690 to 700 unit zone has terminated every prior February recovery attempt, creating a sequential resistance wall between 667 and 700 units. Martinez's framework is binary: reclaim 667 as support, and the next target is 990 units, 49% from February 16th levels, with 1,480 units as the secondary objective, representing a 123% move. Fail to reclaim it and the bearish structure reactivates. The sessions following February 16th are precisely the window where the binary resolves, and where holders and traders watching this setup will get the clear signal the data has been able to provide through the entire month of February 2026. According to reports, the 667 unit level is not a gradual process. It is a discrete threshold that either converts or rejects, and the price data will confirm which within 24 to 48 hours of this analysis. That clarity is what makes this particular setup one of the more actionable technical frameworks Shiba Inu has presented in the current cycle. The February 16th, 2026 data frames Shiba Inu's market structure across volume, momentum, and moving averages. On volume, 24-hour total reached $169.95 million, spot at $31.45 million, and futures at $135.43 million. The 4.3 to 1 futures to spot ratio is a marginal directional improvement from the prior session, with spot participation increasing slightly. Live volume data confirms $159.6 million during the session. According to data on momentum, stochastic K-line at 72.89 and D-line at 76.78, both below the overbought threshold of 80. Shiba Inu is at a momentum decision point. A K-line crossover below D-line signals early deceleration. The MACD is near the zero line. Momentum exists but lacks conviction. The 14-day RSI stands at 41.179, below the 50 neutral baseline. Overall, MA signals 3 buy against 9 sell. On moving averages, the 4-hour 50-day MA is rising, short-term bullish. The 200-day MA has been declining since February 11th. The daily 50-day MA sits above price and is falling. Overhead resistance, the 5-day MA is at 659 units and the 50-day at 663 units, clustering directly within the current price zone. That MA density means the current consolidation is occurring inside the most tightly packed moving average cluster of the recent trading range, a condition where a decisive directional close in either direction carries technical significance beyond the single session, as it simultaneously clears or fails multiple moving average levels at once. Analysts processing the February 16th data land on a specific qualified interpretation. Breakout conditions are assembling, but confirmation has not yet arrived. The stochastic K line at 72.89 sits 7 points below the overbought threshold of 80. Bulls retain momentum territory, but the margin is narrow, a K line. Crossover below the D line at 76.78 within the next 1 or 2 sessions would be the earliest warning of momentum deceleration before any overt price reversal confirms it. The multi-time frame divergence is the core analytical tension. Short-term bullish structure on the 4-hour chart is operating inside a bearish daily and weekly framework, a condition that demands higher volume conviction to sustain any breakout attempt. Without breakout session volume exceeding recent averages, any push above 690 to 700 units is likely to reverse before establishing as a new trading floor. MACD near zero confirms a recovery building rather than a breakout confirmed. Data suggests spot volume at $31.45 million on February 16th needs meaningful growth, ideally toward $50 million or above on the decisive breakout session. To confirm that genuine accumulation rather than derivative speculation is driving the directional move. Without that spot volume confirmation arriving simultaneously with the price close above 667, the breakout attempt carries the same structural fragility as the prior February recovery attempts that each stalled at the same resistance band and reversed before establishing new support. Over the next 1 to 4 weeks, the outcome depends on whether 667 units converts from resistance to support and whether spot volume grows to validate the derivatives-led momentum. In the bullish scenario, a daily close above 667 units with expanding spot volume confirms the resistance to support transition. That activates the 990 unit target, a 49% gain from February 16th. If breakout session volume exceeds 169.95 million with an improving spot ratio, the 1,480 unit secondary target is reachable within 3 to 4 weeks. The 22.1% 30-day decline begins reversing, shifting the psychological posture of the holder base. In the bearish scenario, 667 resistance holds and the stochastic K line crosses below D line at 76.78, triggering a momentum fade toward the 575 to 600 unit support zone. The daily 50-day MA above price stays as a ceiling, with RSI at 41.179 below the neutral line and 9 sell against 3 buy signals across the MA spectrum. No bullish regime shift is confirmed. The February 16th consolidation become the lower high with 508 units as the only structural floor remaining. The next 2 daily closes relative to 667 units deliver the answer. Sustained closes above confirm the bulls. A close below 650 restores the bearish structure. The setup is defined, the levels are confirmed, and the next 48 hours of price data will resolve the question the current analysis cannot. Where do you see Shiba Inu in the next 4 weeks? Does the 667 unit reclaim trigger the 990 and 1,480 unit sequence, or does resistance hold again and force a fresh retest of lower levels? Drop your read in the comments right now. Every response gets read. That is the complete breakout picture for Shiba Inu on February 16th. 2026. The 667 unit level is the line. The momentum is building. Volume confirmation is the missing piece. Subscribe for every update as this develops in real time. Drop a like if this analysis added value, and we will see you in the next one.